Welcome to Tesla Daily. Here's the latest on Tesla. First up, the Model Y has topped California sales for the fourth year in a row. That's impressive. But it's not all smooth sailing. Tesla is seeing a drop in sales thanks to rising competition in the market. In response, they're shifting gears, moving to a subscription model for their full self-driving feature. And there's been some executive changes too. This shakeup hints at a big strategic shift for the company. Meanwhile, their investment strategy is catching Wall Street's eye. Lastly, keep an eye on their FSD subscription and the expansion of their robo-taxi service. Exciting times ahead. Let's dive into some recent news about Tesla. First up, the Tesla Model Y is dominating California sales for the fourth year in a row. It's officially the best-selling vehicle in the state, outpacing the Toyota RAV4 by nearly 45,000 units. Impressive, right? The Model 3 also made waves, ranking fourth in total sales, but there's a bit of a cloud over this success. Tesla's overall sales have been declining for 3 straight years. What's behind this downturn? Well, the end of the $7,500 federal tax credit for electric vehicles and growing competition from traditional car makers, especially from Korean and North American brands, are big factors. As we look ahead to 2026, Tesla really needs to rethink its strategy to stay on top in California and beyond. Investors should keep a close watch on how Tesla navigates these challenges and whether it can turn that sales decline around while still innovating. Now, let's talk about Tesla's sales decline. In January, the company reported a significant drop in U.S. sales for the fourth month in a row. This has raised some eyebrows about Tesla's competitive edge in the electric vehicle market. The decline stems from the end of federal tax incentives and a surge of new EV models from competitors. Plus, the Chinese EV market is heating up, with companies like BYD making strides. Investors should pay attention to Tesla's sales and market strategies, as continued declines could impact stock performance and investor sentiment. Next, Tesla is making a big change with its full self-driving feature. Starting this Sunday, they'll switch to a subscription model instead of one-time purchases. This means customers can access FSD for $99 a month, making it more affordable and accessible. It's a smart move to boost customer engagement and potentially grow the user base for Tesla's advanced driving features. Investors will want to think about how this subscription model might affect revenue and customer retention in the long run. Moving on, Tesla's recent executive shakeup signals a major shift toward artificial intelligence and energy solutions. The company is realigning its leadership to focus on these crucial areas, especially as competition heats up in the EV market. The new team is expected to drive innovation in AI, particularly for enhancing full self-driving tech and expanding energy storage. Investors should keep an eye on how these changes impact Tesla's operations and market position. Now let's touch on Tesla's investment year strategy for 2026. This plan is drawing attention on Wall Street, as Tesla aims to ramp up investments in technology and infrastructure. The goal? To strengthen its electric vehicle and energy solution capabilities for long-term growth. Analysts are optimistic about the potential returns, especially with the rising demand for sustainable energy. Investors should closely monitor how Tesla executes this strategy and its impact on financial performance. Finally, Tesla is expanding its robotaxi service while introducing that $99 self-driving subscription model. This aligns with their broader strategy to leverage advancements in autonomous driving technology. The subscription could drive user adoption, and as Tesla rolls out the robotaxi service, it's crucial for investors to consider the implications for revenue growth and market share in the autonomous driving sector. Success here will depend on regulatory approvals and public acceptance of autonomous vehicles. So it's definitely a key area to watch for Tesla's future performance. That's a wrap for today's Tesla Daily Insights. Thanks for tuning in. And just a quick reminder, this is for informational purposes only, not financial advice. Catch you in the next update.